Hey, my name is Devin Ratoosh and I'm a real estate agent in the East Bay, and we are in a new year and a new decade. It's January 2nd, 2020, and I wanted to share with you my thoughts on the real estate market in the East Bay last year as compared to where I think we are now and what we're going to do going forward. And so the cities I'm specifically talking about is kind of what I think of as the inner Bay Area, inner East Bay, and that would be Berkeley, Oakland, Albany, El Cerrito, basically the areas within 10 miles of San Francisco. And so this time last year, a lot of people were talking about the tech IPOs. Uber and Lyft and Pinterest were going to go public, and there was a lot of hype, frankly, a lot of it coming from the real estate industry, that, okay, because all these new people who've been working at these companies who have stock options that they're now going to be able to cash in on, they're going to have a lot more money and they're going to spend that money on Bay Area real estate, driving the prices up to, like, some of the estimates I heard were 2 to 5 million for just a single family house in the Bay Area. And here we are, and those companies went public and they didn't quite hit the expectation that people thought they were going to. And so while prices did go up slightly last year, it did seem like things were changing a little bit. We've been on this bull run for the past 8 or 9 years where prices have gone up on average, say 7 to 10% every year, where this past year, while they did go up close to 7% in Berkeley, Oakland only went up 1% in median price. El Cerrito, I believe, went down 1%. And so it does kind of feel that things have flattened out a little bit. Prices were up in the beginning of the year, but come September, October, when we usually see our second seller's market, when the second most amount of properties sell after the spring, it was a little bit lackluster. It wasn't as strong as we usually see it come back, and because of that, it led people to feel like prices have flattened out a bit. And so going into this year, interest rates are still really low. I do think we probably have made it to the end of what I think this run is going to be. It's not going to surprise me if prices bump up in February and March the way they usually do, just because there are still a lot of people in the Bay Area and the East Bay who want to buy property. But I don't think we're going to see that 7-8% appreciation that we have seen the past several years. And so if you're a seller, we're still near all-time highs. It's still generally a good time to sell. I don't think you're going to hit the absolute maximum record price that we've been seeing, so I wouldn't expect that, but you're still going to be able to sell likely with multiple offers. For buyers, it's still a good market. The Bay Area is going to remain a great place to live. You know, I'm barring the big one, which is coming eventually. This is a great place. We got great weather. People want to be here. There are high-paying jobs. We have all the drivers that you typically associate with a good real estate market. And so it's still an okay time to buy. I just recently bought. But you need to make sure that you have your timeline considered and that you're going to be staying here for 5, 10, 15 years rather than getting a job change and going across the country a year later, because we're not going to see, or I don't think we'll see, that 5-6% appreciation every year. You won't be able to expect to get a big paycheck out of your house when you go to sell. So just make sure you can weather those, the long run, and if the market doesn't continue the way it is, and if we do see a slight drop. But I still feel good about the Bay Area. It's a great place to be. And so if you have any questions, always feel free to reach out. You can give me a call or send me a text message, an email. I'm always happy to help.